Welcome again, ladies and gentlemen, to Rogue Economics. I'm Sanford Khan. You might say your chief rogue economist, but in reality, I'm a business author and speaker. The title of this lesson, which is lesson 16, moving right along, is How to Demolish the U.S. economic machine. It seems like a difficult thing to do, but in reality, it's actually quite simple. And we're almost on our way doing it with some of the philosophies that are now going around Washington, D.C., and also some of the state governments. John Marshall was the Chief Justice of the Supreme Court in the early 1800s, and he had a saying, the power to tax is the power to destroy. And you'll destroy incentives, and you'll destroy investments. There's two taxes you must be aware of that Congress is considering. The dominant party, which would be the Democratic Party as I speak now, are really seriously considering. And they mentioned this during the campaign, and they're considering it now. And so I'll go over these briefly. And these two taxes could bring down the U.S. economic machine. There's no wall. I got to preface my main body, my lecture here, saying everybody thinks there's a wall that separates the rich from the middle class and those under. No, there is no wall. If you try to hurt those who have done well within the rule of law, it filters down and hurts everybody. We're all connected. You gotta have to understand that we are all connected. We're not, excuse me, we're not separated, and there's no walls. Hurt one, especially the well-off, who've done well within the rule of law and invest their money and create businesses. You hurt everybody if you want to hurt them. The first tax I'll talk about is a unrealized capital gains tax. That's seriously being discussed, not only in the federal government, but also here in the state of California. What they would do, let's say you have an asset, let's take stocks for instance, that have gone up, let's say from $10 a share to $50 a share, probably a high-tech company or something, and you haven't sold it. They would still tax you on your increase in profits on that stock. That's an unrealized capital gains tax. You haven't sold it, but they will still tax it. You got to realize I said capital items. That's stocks. It's also bonds. It's also investment real estate. They may not tax your primary residence, but they could tax apartments, office buildings, commercial buildings, you name it. They could also tax works of art. They could also tax jewelry. What do you think this will do? This will drain liquidity from the economy. Absolutely drain liquidity from the economy. It'll suck it out. It'll suck investment out. There'll be no new investment. What do you think is going to happen to the economy? It'll spiral downward. The second one that I'll bring up, which is again being discussed in the state of California, but also in Congress now, is a wealth tax. This would be an annual tax. They're talking about the latest proposal for those who have net worths of 50 million to 1 billion. It would be 2%. Anything over 1 billion would be 3% annually. And that's not counting the states like California wants to put in their own wealth tax. Again, people would have to sell their assets. There would be no new investment. None. You would have negative energy put into the economy. Either you're going to have put positive energy in the economy to make it grow, or you put negative energy by taxing, the power to destroy. This would destroy incentives to invest, to work, to save, start new businesses. Why? It'll all be taxed away. Why do it? It makes no sense. You might as well send your money overseas to have investments there. So if you have these two investments, these two taxes, which would be one, a tax on unrealized capital gains and a wealth tax, an annual wealth tax, the economy will, not might, I'm not going to use words that are ambiguous. It will spiral downward, and the stock market will go downward, and jobs will be lost, and we go into another serious recession, if not outright depression. You've got to remember this. When you raise taxes, that is deflationary to an economy. It's deflationary. When you have deflation and a debt bubble, deflation and a debt bubble is equal to disaster. You're playing with dynamite. Or actually, no, let me change that. You're playing with lighted matches in a shed that has dynamite. What do you think's going to happen? Don't go down this road. It's negative energy. I'd like to conclude, as I have in the last several videos, and I strongly encourage you to get this book I wrote on Amazon. What I speak about is contained in here, A Rogue Meister's Guide to Free Thinking. It's on Amazon in both ebook and paperback. It's very reasonably priced. You could afford it. You could afford it. I know you could afford it. Now get it. Oh, let me get it centered here. One more time. There it is, folks. A Rogue Meister's Guide to Free Thinking. Appreciate it. Pass this video on to other people. And I believe there's a red button down below there somewhere. Could you subscribe to my channel? I'd appreciate it very much. Until we meet again, may you prosper and keep your money green. Take care now, folks.